You know how it's common practice to just assume that retail's always getting stopped out. Retail is always getting late on the trends. Retail's always providing liquidity for the market. The algos are always trying to stop retail out and just reverse their positions. Well, there is some truth to that. There are positions that are stuck and trapped in the market. And what I'm going to show you today is one of the ways, there are a few ways to identify where the crowd is actually getting jammed up and the market's expected to reverse and go for a stop hunt rally or stop hunt drop. Now, retail, it's the butt of a lot of jokes here, getting stopped at. Algos are always fishing for their stops. That's not necessarily true, right? Algos aren't sitting there trying to find where retail stops are and just digging them time and time again. But what is true is market participants on the strong hand and the weak hand, and what we want to identify is where those weak-handed traders, even if they're retail or not, are getting trapped, stuck, and there's going to be a reversal in price. So we don't buy late into rallies or we don't sell into the hole. If we can use this specific tool to identify where they're at, we can identify where those stop hunts can appear and at least not get ourselves trapped in positions. So that's exactly what I'm going to be talking about today throughout the video here. You can see on the screen we have the footprint. That's going to be the main tool that we're going to be using. I'm going to be talking about how to identify trap traders, stuck traders, late traders, weak-handed traders, retail traders, late on trends with a footprint to identify where the large reversal is, where they're trapped, and where they're going to feel pain, right? So let's break that down. Let's dive right into this. Let's jump right into the intro of these videos, and I hope you guys have a great time here at TRADEPRO Academy. Welcome to our channel, and remember, we've got all things order flow and auction theory, volume profiles, market profiles, so go check out those other videos as well after you identify how we can find trap traders using a footprint chart. Order flow is a great tool to identify the strength and the weakness in the market, right? We see all the orders that come in on the futures market, buyers and sellers, who's holding strength, who's weak, who's getting trapped, and so on. And being able to identify trapped traders is one of the biggest pluses and opportunities of order flow and following order flow. And that's exactly what I'm going to be doing with the footprint today. I'll be showing you how to identify them fairly easily from a visual aspect, because there are many other order flow tools. The main one, the depth of market or the DOM, which really helps you identify where the strength, the weakness is coming in real time. But from a visual perspective, right, the footprint can be very helpful. So naturally, if we combine the footprint and the DOM, we can make a killer duo. But for this video, from a visual perspective, let's just focus on the footprint. So I'm going to be showing you how to find the traders that are late on the move. This is the idea, right? Late on the move that provides an explosive opportunity to run some stops against them. First and foremost, let's break down what is a trapped trader, right? The concept of trapped traders doesn't only fall into the hands of retail. It's not like, oh, retail's the only idiot that's late on the trend, so on and so forth, and they're getting stuck, right? It's not like the noobs are getting in at the wrong time and the smart money comes in and takes their stops, right? That's just not the reality of it. Trapped traders are late traders on a trend, right? Yes, they can be anyone realistically. They are weak-handed traders that get in at the end of the move. So the thing with stuck traders is that they create large volume momentum, which looks like real buyers or real sellers at the end of a trend. And often, right, this is where retail comes into play, often gets retail trapped in the idea that, oh my God, they keep buying or they keep selling. So they get in as well, right? They buy tops and they sell bottoms. So if we consider that retail is generally late on the move, right, then those reversals happen. Have you ever seen price rally 30, 40 points on the S&P 500, then all of a sudden, boom, just dumps aggressively? That is the culmination of traders getting trapped and their stops getting hit. So think of it, right? The newer trader generally isn't on the move when it's forming or when it starts. The general trader gets stuck in by momentum, right? They look at momentum, they see something rallying, they're like, oh my God, I gotta get a piece of this. And they get in when they finally decide, yeah, this is bullish enough, yeah, this is bearish enough. The thing's already run like 1%, let's say, on the equity futures. So most of the time, they get into the final press of the move, right? They maybe see a little green here and there, and then boom, they get pressed, they get stopped, and the price reverses. So when there's a strong move to the upside, retail looks to get in, right? Where can I get in? Here's a big buyer, big trend move, so on and so forth. Big buyer comes in at the top, retail's like, there's my big buyer, and boom, instantly reverses and the sell side comes in. So retail, they do get trapped and reversed, but more importantly, the weak-handed traders get trapped and reversed. So when the reversal happens with an accumulation of a lot of stops hanging on the other side of the move, right, you get that expected stop run. So if you're buying, right, all these buyers that started the move 20 points earlier, they gradually move stops. And when they stop buying, right, and you're left with just late buyers, weak-handed buyers, you start to see, okay, they're rotating, they keep buying into highs, nothing happens. And then eventually, once we get a stair step down, they start hitting stops. Boom, 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 boom. Stops getting flush. And generally, that's what happens with retail. So the general idea, be on the move with the strong-handed traders, run away or fade the weak-handed traders. That's exactly what we're going to identify right now. We're going to be breaking down a few different steps using the footprint to identify where these guys are trapped and where that larger reversal can happen. So the breakdown of this is going to be fairly visual because visualized on the footprint, we can see past data, we can see what had happened. Even as it's getting created, we can see what's going on there. So it's a very nice visual for those that might be a little overwhelmed by the depth of market movement at first. So the main premise of these charts is to find imbalanced action between buyers and sellers. That's generally how you can find good positioning. Imbalanced positioning in the market allows you to find larger moves. So this is best seen on Delta, right? Delta is something that we've talked a lot about on this channel. It's something that we've talked a lot about over the past few videos as well. And Delta is the market buyer minus the market seller, which allows us to see the net buying or the net selling. For example, on the S&P 500, right, if there's 1,000 market buyers that come in and only 500 market sellers that come in, at that specific level, what's going to get created is going to be positive 500 delta. Now, on the other hand, right, let's say there's 3,000 net sellers, but there's only 1,000 net buyers, right? So you get negative 2,000 delta. When we look at the S&P and we break that product down, generally speaking, between 800 to 1,000 is the minimum barrier for large imbalance traders, we can call it. Now, I want to focus more on the S&P 500 since, in essence, it's more of a calm market, we can say. It's a slower pace, right? Smaller movement, and very, very thick on the liquidity. It's the thickest, most volume, most traded equity futures market. So the liquidity is fairly thick. At individual levels, you have multiple hundreds, thousands of traders that are trading. So you can see very large numbers, and the discrepancies of those numbers when you compare them are fairly large. So if we look at this, right, and Delta is going to be the main premise of what we're looking at to identify momentum moves and trap traders. Each of these candles, on the right-hand side of each candle, you have these blocks that are different shades of red and blue. This is the net delta at that individual level in that individual candle. On the bottom here, each individual candle, right, has its own delta for that candle, the first row here, and the number is situated at the top of each candle. The middle column is going to be the cumulative delta, which tells us throughout the day how the delta transpires. These are a few different things that we're going to be looking at. Now, if we identify, right, how traders are getting trapped, we generally have a move, right? We have a move that retail is most likely not a part of, or weak-handed traders are not generally a part of, and prices rally up, everything's looking good. Now, when it comes to the identification of a strong move, right, if we look at it from the delta perspective, what would happen is we need to see the candle itself, right, holding out pretty positive delta as we run up. So what that would suggest is these blue candles, which are up candles, right, they have fairly heavy delta, right? 1,000 here towards the end of this. And what would be great is that each individual level, not every single one in the candle, but a few individual levels to hold out nice, strong, positive delta. So 300-400 threshold on each individual candle. If there's a few of those and we hold above them every step of the way, that tells us that we have some strength in the market. Right, as we look at cumulative delta on the way up, it would be great if cumulative delta increases as prices increase as well. So when we identify where traders are potentially trapped, right? If we look into highs, like this is a high right here where we saw a lot of traders getting trapped. Large positive deltas start accumulating into the highs, which we would think is good, right? But when we start to see large positive deltas accumulating into the highs, and they actually get rejected, meaning that prices start selling and you start to see the culmination of heavy negative deltas against those large positive deltas, right? So here you got 300-ish positive delta. Right away, 300-400 negative delta pushes prices down. We come up, you can see at these highs, they're buying, right? Very heavy positive delta into the highs of these candles, into this candle as well, into this candle as well. Boom, gets rejected. Very heavy negative delta against it. So when you start stacking up all of these positive deltas into highs, and you get constant rejections, where the candle following, right, or the candle in itself turns negative, and you get large negative sellers, right, large negative deltas stacking up in that block, you're most likely seeing an area where traders are getting trapped. Another thing is, right, okay, we start rallying, and then all of a sudden, once we start rotating, the delta starts dropping off, right? The delta starts dropping off, it starts going negative as prices go up, right? The cumulative delta. So that's not going to be a great sign for us. So immediately when these buyers come in and they form just heavy delta, positive, we can look at it from an accumulation perspective. You can see right here, the net at that area is accumulated to positive 1,000, positive 1,300, right? Positive 900. And they keep rejecting and offering with large negative deltas pushing prices lower. You're most likely getting the culmination of traders actually getting trapped into that area, into the highs and turning lower. So you can see right here. This is what I'm talking about, right? In our chat room, I'm selling 91.92, right? At 933, almost off the open. Why? Because the accumulation of these positive deltas on the way up, right, all of a sudden they get rejected by these very heavy net sellers. So they come in, they sell, boom, they sell, boom. They try to buy, they're like struggling, they're trying to breathe, boom, they sell again, right? They run it up. And look, if I look at each individual candle and I'm trying to identify the cumulative delta, this green candle has one net delta. This one has 119. The second these buyers try to buy the top, they get rejected by heavy sellers again, right? So when we see the culmination of that, those three specific things, the accumulation of heavy buy delta into the highs, we got large sell delta reacting against those heavy buyers, and the cumulative delta on the session starts dropping. What you're seeing at that point is the advancement of the sellers coming into the market and traders getting trapped into highs. It's the same thing for the bottom. Once we try to identify a bottom, it's not like, oh my God, okay, I see this massive negative delta at these lows, I have to start buying, right? That's not how it works. How it works is very, very similar to the downside. So all of a sudden you get very heavy negative delta that drops price, right? So you can see the stop run. The stop run happens when there's large blocks of negative delta stacked up continuously, as well as the market imbalances on the sell side within the candle are just like several rows of reds and zeros. So you get large sell, large sell, large sell, large sell, large sell, and all of a sudden, okay, interesting, large sell. We get the large sell at the lows, right? Reversal, candle goes green with some positive delta at the highs. Candle to the upside with negative delta. That's telling us that the movement against the large sellers is most likely trapping sellers into these lows. Okay, so these guys get some positive delta, it pulls back. So there's a lot of selling going on again at this low, right? Again at this low, and a big buyer steps in against it, right? Heavy buying into that low where these guys were supposedly getting stuck. So, all right, interesting. We start noting what's going on, right? Cumulative delta starts to increase a bit. So over here, wow, That's negative 1,200 market sellers at this low, and price immediately reverses back up. And the candle is a green candle with buyers and slightly neutral delta here. That's fairly interesting. So these guys get very, very trapped into 73, right? These guys, again, massive buyer steps in, and from here, you start decreasing the negative delta or increasing the delta cumulative. So you have these massive traders that are stuck into the lows, plus buyers that are reacting. So if I say, okay, I want to get long 73, I have the accumulation of the large negative deltas into these lows. I said I want to get long 73 because this seems like the common theme of where people are getting super active on the imbalance. So you got a large negative seller over here. This right here is the nail in the coffin, right? Huge seller at lows, huge seller at lows, immediate rebid back above these levels, massive, massive buying. Again, when you see these guys, when they pull back down, you can start buying 72, 73. They're most likely stuck. How many times are going to test this, allowing big buyers to step in, raise the cumulative delta as well, and allow more buying to step in, right? They keep getting trapped. So this candle here as well. If you're unsure, wait to see how it can close. So they sell aggressively into the lows, and boom, we close green. The same situation here. Massive sellers into these lows against big buyers, and here starts the massive bid that opens up. So if you're unsure of where to get into these moves, look at that. That is a stop run. If you're unsure to where to get into these moves where people are getting trapped, right? Weak-handed traders are getting trapped into lows or into highs. You just want to wait, right? You want to wait for the information to appear. As long as there's massive selling into lows, especially you can see single print selling here, right? Big market sellers, massive delta into lows. Once you see that these guys get rejected, meaning that the next candle allows for a push back above all of these negative delta blocks with some nice positive buying, right? At that point, you get confirmation, okay, I can buy into these buyers around 72 that came in and pushed these things aside and get in on the move, right? When you see these massive sellers and they reject, right, you can start looking, okay, can I get into this somehow where these big buyers stepped in 72, 73s? It's the rejection of the sellers or the buyers that makes them stuck, right? And they can be selling into lows, selling into lows, selling into lows. But if there's no one to counterbalance that kind of selling into lows, meaning a massive buyer that steps in, you can see that trickling effect to the downside, right? So you want to make sure that these guys are actually trapped by seeing the rejective of opposite buying or opposite selling coming in to counteract what is going on in this market. So these are very, very effective ways to identify if traders are getting trapped, if you're late on the trend, if you should get out of a move that you're already into, and the beginning stages of what could be a massive stop run or a massive drop, right? In either way, realistically. Now, with this, right, this is a great piece to visualize how traders are getting trapped, how weak-handed traders are getting trapped. But if we combine this with a depth of market, we can see the reactivity a bit clearer. If we combine this with auction theory and volume profiles, we can actually identify the levels preemptively, right, as to where this is. Right, look at that. If we have an area, we're risking small 73 to 75, right, about 20% of today's gains with a stop under 70, right? This is what we posted early in the morning. The low of the move, right? The low of the move on this area was just, right? 73.25, 3 ticks away from that stop, able to identify where these traders are trapped. And look at these moves, right? Look at these gargantuan moves that shape up. You got a 30, 40 point rally into the end of the day when you can identify where these traders are actually stuck, where these weak-handed traders are late, where these retail traders are late. So practice this, break this down on the footprint, right? If you want access to these charts, check out community.tradeproacademy.com in our Discord where you can find those, right? 100% free, and we'll see you in there. So remember, practice understanding where traders are getting late on the trend so you don't make the mistake of shorting a hole or buying a high. There's more to it. We can add a few different tools, but that kind of encompasses a very, very good beginner general guide to identifying where traders are trapped. So if you guys enjoyed this video, hit that like button, hit that subscribe button, drop a comment down below. What do you want to see next? And I'll see you guys in the next video.